Because we're talking about the fiscal cliff. Moving and shaking this morning is Warren Buffett. With just 5 weeks until the scheduled so-called fiscal cliff of $600 billion in tax increases and spending cuts, Charlie Rose sat down with Buffett to gauge what he thinks will happen in January.
I don't think it'll do that much because I think people will assume that a solution will be found quite promptly. It's a little like the debt ceiling question. I mean, people, the rest of the world may think that we're idiotic at times, but they don't think we're going to commit suicide. So I think I hope something gets worked out before January 1st. But if it goes a little bit beyond that, I do not think that.
So January 10th or February 2nd?
I will not be selling. If you guaranteed me that the fiscal cliff, we would go past that, I wouldn't sell a share of stock today.
Well, that's a pretty bold assessment from Buffett, who, of course, believes very heavily that investors should be all in equities. Now, Adam, you have a different take on this?
Well, I think the fiscal cliff is a big deal, but I tend to agree that there'll be some resolution. I think the Morgan Stanley house call is they'll probably come up with a plan, but it'll be pushed out probably 6 months before you get the final details of it. So I think the question is...
So wait, so does that mean that we'll go over the cliff or not?
They probably will alert you that they're going to deal with it over the next 6 months, but won't have all the details worked out. So look, the way we see it, it's about a 500 basis points impact on the economy if they don't solve it. That likely they're going to temper about 350 basis points, 3.5%.
Off GDP you're talking about?
Yeah, so you have a 1.5% GDP headwind, which is a lot, but things like housing are picking up and durables and autos. So we have, the Morgan Stanley forecast is for about the same GDP growth in 2013 as we have in 2012. So we don't see it a huge impact the way it currently fleshes out, so we tend to agree with that conclusion.
Well, but his conclusion is, look, I wouldn't sell one single stock if we even went over the cliff.
Yeah.
Is that a bit?
Well, I think he probably has longer holding periods than the average investor, so he can see through it. I think the Pavlovian reaction from the street will be a little more negative. You know, he gave an example of debt ceiling. You know, the market sold off when that happened, then recovered afterwards. So I think he's saying, look, I'll hold it all the way through to the recovery point, more than he's saying it'll be it'll be great the day they do it. I wouldn't imagine the market would act great the first day.
No, and that's what a lot of people are predicting.